The Fed's certainly a part of it. I think the language in the last press meeting that we're going to go past neutral, we have a long way to go, that shook up some people. But look, we're normalizing the entire picture, not just interest rates. Volatility is normalizing. PEs are normalizing because we're no longer in that era of financial repression where we have to do everything to fight potential depression. That's over and gone, thank the good Lord. Now we're just kind of trying to plot a way forward for this cycle, and the economy and the earnings are doing well, but we've had some PE pressure.
Are we being too complacent when we say that this is just a process of normalization, Jason? Or should we be concerned about the Fed's rate trajectory given some of the issues that are brewing, such as the full impact of tariffs? Companies have not felt the full impact of tariffs. That's just one thing, not to mention EM concerns and China's bear market.
Well, you paint a difficult picture, and I think it's not the wrong one. We shouldn't be complacent about the process of normalization. It's going to be difficult. The reality is, if we had elevated valuations, in part because we had rates that were too low and the Fed, in my view, is behind, when they catch up, we're going to have to pay some of that back. It doesn't mean that economic growth in the United States is challenged, but it does mean that some of the excesses, whether they be in some parts of the equity markets, and certainly, in my view, in some of the private markets, if those come back, then that's consistent with reality. The VIX, as described by your previous commentator, is coming up, sure, and maybe that blocks some IPOs. But if a normal level of volatility is blocking IPOs, maybe those IPOs shouldn't happen in the first place.
Hey, Bob, it's Guy. Should the Fed have one of their eyes on the market, or should they be sort of oblivious, or should they sort of turn a blind eye to what's going on in the marketplace? With that said, we're only down, 4 or 5% from the all-time high.
Yeah, how about out of one corner of their eye? You're absolutely right. I mean, we're in the long term, this 4 or 5% off the high is not going to matter. If we end up down something bigger, some double-digit number, they'll have to ask the questions why. But they got to focus on the economy and the inflation rate and those good things, and the markets will do what they're going to do.